If you've sold a home with an older roof anywhere in DC, Bethesda, or Northern Virginia recently, you've probably run into an insurance agent who suddenly had a lot more questions than usual. Fannie Mae just made a change that directly affects that conversation, and it's already in effect, not coming later this year. Today, I'm breaking down a property insurance update from Fannie Mae that applies specifically to single family homes, 1 to 4 unit properties, and what it means if you're buying, selling, or already own in our market. I'm Sherine Monir, a realtor and licensed interior designer. I am based here in Washington, D.C., and I am with Compass Real Estate. And I work with buyers and sellers across upper Northwest DC, Bethesda, Chevy Chase, and Northern Virginia. This is the kind of update that never makes headlines, but it can directly affect whether your file moves smoothly through underwriting. By the end of this video, you'll know exactly what changed, why it matters most for older homes, and what to expect the next time you're insuring a property in our area. Here's what's actually happening. On March 18th of this year, Fannie Mae issued lender letter LL-2026-03 alongside a separate set of condo rules I covered in another video. It changes how lenders verify property insurance on 1 to 4 unit properties, single family homes, duplexes, triplexes, and fourplexes. Before this update, lenders had to document the replacement cost value of a property to confirm the policy provided enough coverage. That means extra paperwork and extra back and forth between the lender, insurer, and the appraiser before a file could close. Fannie Mae has retired that requirement entirely. The lender no longer has to separately document and confirm that replacement cost figure to sign off on coverage sufficiency. Here's where it gets interesting for our market. Fannie Mae also retired the requirement that roofs be insured on a replacement cost basis. A policy is now considered sufficient as long as it covers the home on a replacement cost basis overall, with roofs as the one exception. Roofs still have to be insured. They just don't have to be insured at full replacement cost anymore. Actual cash value coverage on the roof now satisfies the requirement. A lot of carriers have been pulling back from offering full replacement cost coverage on roofs or charging a premium for it, especially as roofs age. A meaningful share of the housing stock in Wesley Heights, Spring Valley, and Chevy Chase DC is older. Original roofs, multiple re roofs over the decades, the kind of detail that comes up in almost every home inspection. Before this change, an insurer offering only actual cash value on an aging roof could have created a real obstacle at the lending stage. That obstacle is gone. Fannie Mae was direct about why. In the letter, they point to rising premiums and limited insurance availability, creating real challenges for borrowers. And they're responding by simplifying what lenders have to verify. Worth noting, this is happening at the same time Fannie Mae is tightening reserve requirements on the condo side. It's not a blanket loosening of standards. It's a targeted fix for a specific friction point in a single family transaction, while risks gets tightened elsewhere in the system. So, what does this mean for you? If you're selling a home with an older roof, this removes a sticking point that used to surface during underwriting. No more chasing a replacement cost estimate just to satisfy the lender, and your buyer's insurance options just got a little wider. If you're buying, a code offering only actual cash value on the roof isn't an automatic deal breaker anymore. And because this took effect immediately, it's already the standard your lender is working under right now on any file in progress. One thing that hasn't changed, other coverage requirement stays the same. This is a narrow fix, not a loosening of insurance standards across the board. You still need adequate coverage on the home itself, and it still has to hold up at full replacement cost everywhere except the roof. To recap, Fannie Mae retired the requirement to document replacement cost value and retired the requirement that roofs be insured at replacement cost. Actual cash value on a roof now satisfies the requirement, and everything else about coverage sufficiency stays the same. It's a small change on paper, but for an older home and a hesitant insurer, it can be the difference between a smooth closing and a stalled one. If you're getting ready to buy or sell a single family home in DC, Bethesda, or Northern Virginia, and want someone already tracking exactly how changes like this affect your timeline, reach out. I'll walk you through what it means for your file. You can contact me at SherineMonir.com YouTube. I'm Sherine Monir. I'm here whenever you're ready.